So I'm your typical, first-time home buyer that we work with is probably buying between 600 and 800,000. What are some of the questions, given snapshot in time, I need to be thinking about?
So I think first and foremost, it comes down to how long you want to stay put in the same spot. If you're someone that likes to move around a lot, then continuing to rent is probably the right move. If you're someone that likes to stay put for the next 3 to 5 years, then if you're playing with the idea of buying, it's probably the right move.
But David, I'm scared. Interest rates are so high. What about what happened with COVID and in 2021?
COVID was obviously one of these crazy things that occur every decade or two. What I would say is as long as you're okay with what you can afford on a monthly basis, I wouldn't worry too much about interest rates. I would worry about what you can afford and finding a really good place.
What I think people don't talk about enough is two things can be true at the same time. It can be a good time to buy in 2021, and it can be a good time to buy in 2022. Here's a question for you. There was a homebuyer confidence poll that just came out. What percentage of home buyers say that it is a good time to buy? You're not expected to know this, but
I think it's going to be below 50. So I'm going to guess somewhere around 40.
16%.
Oof.
It is a record low. And it's coming from Fannie Mae. That's incredibly low, but it can't be, it's not all that surprising. Is buyer confidence low right now?
Yeah.
Is it as low as you've ever experienced?
Yeah.
I bet you it'll change given, so last week we saw mortgage rates come down for the first time. I mean, it's going to be interesting. So let me throw some more data at you. June of 2022, we saw our peak in the number of closed transactions. From then, the peak. Let's take, October closed out. How far down are we from a percentage standpoint from June?
I mean, some of it's seasonality.
For sure.
It's obviously going to come down.
Oh, no doubt.
And then obviously rates shot up. I'm going to guess somewhere around 25.
Yeah, 33%.
Okay.
And you said it exactly right. And it comes down to nuance. And that's we're not the type to just give these blanket statements, the housing market's crashing. No, it's going down at a faster rate. From June to the end of October, it came down at a sharper rate than usual, right? So the number of closed transactions came down dramatically. But with that, and I think this is more interesting, is that prices dropped by 13%, right? So all of these people had this, this big boost in their equity. And there's an argument that everyone across the board lost 13% of their home's value. The question is, what do we see happening going into December and then the first part of 2023?
I would think, obviously going into December, I think it's going to be slow. Come mid-January, when we usually see more of the spring market pick up, I think demand's going to come back. Obviously, we've already seen a little tick down in interest rates.
Let's kind of go ahead into what are some of the things that we're going to see in 2023? Date the rate, marry the home. Define it for us first.
Basically what it means is the price that you pay for the home is going to stay the same for as long as you own that home. Your rate, however, can fluctuate. So you marry the home, date the rate, so you can refinance.
A long-term relationship with the home.
Right.
Short-term relationship
with your rate.
With the rate.
I thought it was clever when I first heard it. But I think that, again, it's a blanket statement. And like I said, I don't like to do anything with blanket statements, especially in real estate. So I think it's very important that whoever it is that's buying this home is not overextending themselves financially to date the rate, hoping that it comes down next year or needing it to come down next year, because it might not. It might take 2 years. It might take 3 years. And if you're putting yourself in a bad position,
just never good advice.
It's never good.
Yeah.
So there's more that needs to be said.
Let's talk about some other strategies that we've seen. There's an opportunity to buy down your rate. So instead of potentially getting closing cost credits or repair and replacement credits, we are seeing buyers, let's say you're under contract at $500,000, instead of asking for a $5,000 credit for repairs, they're asking for $5,000 to reduce their interest rate. But what do you think about that strategy for a homebuyer?
If you're using credits to do it, it's not like cash out of your pocket anyway. So yeah, I think that's a great way to go about getting a little bit lower interest rate.
Do you know what a 2-1 buy down is?
I do.
Define it for us.
Basically, a lot of banks have come out with this 2-1 buy down, where basically you pay a lump sum and you can get, I believe for the first year you get 2 points off your interest rate. For the second year, you get 1 point off your interest rate. After that, you go back to whatever the market demands.
Yeah, exactly. So it's very similar to buying down your rate, but you're front loading it. Why? Because everyone expects interest rates to come down. There's an argument to not buy down your rate with, for the life of your loan and have a $75 per month decrease, to front load that $5,000 and get $150 or $200 reduction in your monthly payment.
I think it's a really good option for a lot of people. And I think it's smart that they came up with it, and it's definitely something people should explore.